Let me start with a question. What is Apple's most profitable product? For over a decade, the immediate answer was the iPhone. It built an empire and remains the key that unlocks Apple's door. But it is no longer the most valuable treasure in the room. Today, Apple's most valuable product isn't a thing at all. It's the high-margin recurring revenue ecosystem that every device enables, the services division. The thesis of this presentation is critical for any financial analyst. The quality and composition of Apple's revenue driven by services are now far more important to its long-term valuation than the unit sales of iPhones. To understand Apple's future, we have to appreciate its past. For years, Apple built a fortress on one foundation, the iPhone. In 2015, the iPhone was the undisputed king, accounting for 2/3 of all revenue. The entire business model depended on the hardware upgrade cycle. It was phenomenally successful. But from a corporate finance perspective, this model carries serious risks. First, market saturation. The world was running out of new premium smartphone buyers. Growth was inevitably slowing down. Second is cyclicality. Hardware sales are hit-driven. An unpopular iPhone model could have a disastrous impact on the bottom line, creating volatility that investors hate. Apple's leadership knew the fortress needed a new defense. They couldn't just sell more boxes. They had to build a recurring relationship with the billion-plus customers already inside the walls. This brings us to Apple's new engine, the services division. This is now a standalone titan of a business. Look at this growth. Services revenue, which includes the App Store, iCloud, Apple Music, and Apple Pay, has exploded. It has more than tripled since 2017, now approaching an annual run rate over $100 billion. This isn't cyclical growth. It's steady, predictable, and deeply integrated into users' lives. But this is the most important chart of the day. Look at the gross margins. The product segment operates at a healthy 36% margin. Excellent for hardware. But the services segment operates at over 72%. Every dollar of revenue from services is twice as profitable as a dollar from hardware. This is the core of the financial pivot. Apple is systematically shifting its revenue mix toward a stream of much higher quality and profitability. This is the power of recurring revenue. Unlike a one-time hardware sale, a subscription provides predictable cash flow. For investors, this is an annuity. It dramatically increases customer lifetime value and lowers the risk profile of the entire company, making earnings far more resilient. So, what does this mean for Apple's valuation? The answer is simple. The market values different types of earnings differently. A dollar from a hardware company is not valued the same as a dollar from a services company. Hardware companies are cyclical and trade at lower price to earnings, or PE, multiples. Software and services companies, with their recurring revenue and high margins, are seen as less risky and more scalable. They command a higher P/E multiple. Apple's strategic genius has been to convince Wall Street to re-rate it. Investors no longer value Apple as just a hardware maker. They are applying a premium software as a service valuation to the company because of the quality of its services division. This shift is the primary justification for Apple's sustained high valuation. The market understands the true value is not just in the next iPhone launch, but in the ever-growing stream of high-margin, annuity-like payments from its massive and loyal customer base. To conclude, Apple's story over the last decade is one of the most brilliant financial transitions in corporate history. They used the most successful hardware product ever to build the ultimate services platform. The company's resilience is no longer just a function of design in silicon and glass, but of financial engineering that has built a more durable and profitable model. The genius of Apple today is not just product design, it's the design of its income statement. So I'll leave you with a challenge. For your next financial analysis, don't just look at top-line revenue growth. Dissect its quality. Ask yourself, is this one-time revenue or is it recurring? Find the hidden services engine in the company you're studying, because as Apple has proven, that is where you will often find the true long-term value. Thank you for watching. Please subscribe our YouTube channel to learn more.